Could MicroStrategy trigger the next financial crisis? You're about to step into a corner of finance that almost nobody wants to talk about. A place where corporate ambition, unchecked risk, and political pressure collide. What you learn here, you won't see on CNBC. So stay close, because this might be the story that changes how you see our financial future. They say fortune favors the bold. But what if one bold bet is so outsized, it becomes a lever on the entire system itself? One company's decision to gamble on Bitcoin could eventually ripple through the whole financial world, creating risks no one is prepared for. MicroStrategy is no ordinary company. It started as a humble business intelligence firm, but over the past few years, it has transformed into something far more controversial. It's now the largest corporate holder of Bitcoin on the planet, a company whose fate is tied directly to a volatile digital asset. This isn't a rumor or media exaggeration. It's deliberate strategy, built on the belief that Bitcoin will outpace everything else. But as you'll see, that strategy also turns into a ticking time bomb sitting quietly beneath the surface of the financial system. MicroStrategy has spent years accumulating Bitcoin, billions of dollars worth, financed through debt, convertible bonds, and new stock issuance. Every time Bitcoin rises, their balance sheet looks stronger. But when it falls, their risk doesn't just grow. It explodes exponentially across every line of their financial structure. Imagine this scenario. Bitcoin suddenly crashes 40, 50, even 60%. The company's paper wealth evaporates in days. Lenders demand collateral, margin calls arrive, and whispers of default spread through the market like wildfire. The panic doesn't stay in crypto. It moves into mainstream finance. This isn't just a crypto story anymore. It's a corporate leverage story, a contagion story, a financial stability story. When a publicly traded company uses borrowed money to make massive bets on a speculative asset, it blurs the line between innovation and recklessness, and the consequences could reach far beyond one firm. In traditional finance, diversification is sacred. You spread your risk. But MicroStrategy has done the opposite. It's turned its entire balance sheet into a leveraged Bitcoin ETF in disguise. When the asset rises, they soar. When it falls, everything connected to them trembles. What few people realize is that MicroStrategy's debt is widely held by funds, institutions, and even ETFs that investors own in their retirement accounts. If the company were forced to liquidate or default, the pain would radiate through those holdings, affecting people who've never even heard of MicroStrategy. Think about that. A business software company that once sold analytics tools now carries a systemic footprint large enough to shake credit markets. If its balance sheet cracks, bondholders could face huge losses, and lenders might tighten credit across the board. That's how financial contagion begins, quietly, then suddenly. MicroStrategy didn't just buy Bitcoin, it borrowed heavily to buy more. Layering debt upon debt, leverage upon leverage. The more it borrowed, the more dependent it became on Bitcoin, never falling too far. It's a spiral that works beautifully in bull markets, but catastrophically in downturns. And then comes the wild card, government reaction. Regulators hate being surprised by hidden risks, especially when those risks blur the line between traditional finance and crypto speculation. If MicroStrategy starts to wobble, regulators could panic, impose sudden rules, or demand emergency oversight that shakes markets even harder. That's the nightmare scenario. A company under pressure, regulators reacting late, liquidity freezing, and fear spreading through institutions. A single corporate decision to hold too much Bitcoin could ignite a global policy overreaction. And once confidence breaks, no one controls what happens next. Most mainstream analysts don't talk about this because it sounds too extreme, too uncomfortable, too unfamiliar. But isn't that how every financial crisis starts? With risks everyone ignored, leverage nobody questioned, and optimism that blinded even the experts until it was far too late. Think back to 2008, When leverage built quietly beneath the surface until one link snapped and the entire chain collapsed, back then it was housing. This time it could be Bitcoin, a 24-hour asset traded globally without a lender of last resort. That's what makes this far more unpredictable. So what could actually trigger the next cascade? A sudden crash in Bitcoin prices, margin calls on MicroStrategy's debt, bondholders dumping exposure, ETFs quietly marking down positions, and fear snowballing through both crypto and traditional markets. In every crisis, it's not losses that spread, it's fear. Of course, there are counter-arguments. Some say MicroStrategy isn't large enough to threaten the system, that its debt is small compared to global markets, that regulators would act quickly to contain any damage, and that today's financial system is more resilient than in the past. Maybe that's true, but systemic failures rarely start with the giants. They start with something small that connects two worlds. In this case, corporate credit and crypto volatility. Confidence once broken doesn't care about market size. It cares about perception, and panic is contagious. When investors lose faith, they pull back. Hedge funds, ETFs, even banks start de-risking. Credit spreads widen, liquidity disappears, and suddenly something contained becomes a global story. That's how small cracks in confidence turn into deep fractures in the financial system. To see it coming, watch for the signals. Rapid Bitcoin drawdowns, widening MicroStrategy bond spreads, regulators mentioning corporate crypto exposure, stablecoins tightening liquidity, and institutional funds quietly selling crypto-linked assets. These are the red lights most people miss, until it's too late. Because the truth is, MicroStrategy isn't just a company anymore. It's a symbol. It represents the collision of two ideologies, Wall Street's leverage culture and Bitcoin's decentralized revolution. When those two collide, the fallout isn't theoretical, it's systemic. It's a bet that Bitcoin will always rise faster than debt can compound, that volatility can be ignored, that traditional finance can safely coexist with an unregulated asset. But if that bet fails, it exposes a truth few want to admit. The system isn't built for assets that never sleep. If MicroStrategy falters, governments will move fast. They'll clamp down on corporate Bitcoin holdings, impose stricter capital rules, and send shockwaves through the market. Ironically, those measures might create the exact panic they were designed to prevent. The narrative could flip overnight, from Bitcoin as digital gold to Bitcoin as systemic threat. That shift alone could drive massive outflows, crush liquidity, and set the stage for another wave of fear, not just in crypto, but in every asset tied to it. That's why this story matters, not to spread fear, but to reveal hidden fragility. MicroStrategy could survive and even thrive if Bitcoin keeps rising, but if volatility spikes or regulators strike back, it could become the spark that ignites something far bigger than itself. Every financial era has its symbol of overreach. The dot-com bubble had Pets.com, the housing crash had Lehman Brothers, and the crypto corporate age might have MicroStrategy, a single company standing at the intersection of innovation and danger, ambition and collapse. So as we look ahead, the question isn't whether Bitcoin will survive, it's whether the institutions tying themselves to it can survive their own greed and leverage. Could MicroStrategy trigger the next financial crisis? Maybe not yet, but the ingredients are all there. Leverage, concentration, psychology, and fear. Those four have always been the recipe for financial disaster. And when they mix with global politics, unstable regulation, and 24-hour trading, all it takes is one spark, and the world changes overnight. No one knows when that spark will hit, but now, you know where to look. You understand the hidden mechanics others ignore, and when the next wave comes, you won't be caught off guard like everyone else. If this opened your eyes, hit subscribe, ring the bell, and share it with someone who still thinks corporate Bitcoin exposure is harmless. Because some stories hide in plain sight, And the more people who understand them, the safer we all become. Thanks for watching, and stay sharp.